Disclaimer. The findings of the following analysis are the sole opinions of the writer and should not be considered investment advice. Stellar's XLM efforts to weaken the 4-month trendline resistance white dashed came to fruition as the bulls flipped it to support following their recent rally. The latest buying resurgence entailed a rising wedge structure, one that eyed to retest the $0.125 ceiling. A compelling close above its present pattern would position it to invalidate the bearish inclinations. The bulls need to ramp up buying volumes to sustain their ongoing buying streak. At the time of writing, XLM was trading at $0.124. Up by 3.36% in the last 24 hours. XLM daily chart. XLM's previous downtrend chalked out the 4-month trendline support. Previous resistance. On the daily chart, however, after dropping down towards its 20-month low on 13 July, buyers have regained their momentum. As a result, the price action jumped above its near-term EMAs. Even so, the 20 EMA red was yet to bullishly cross above the 50 EMA cyan and confirm a robust uptick in buying edge. Such a crossover could heighten the chances of a bearish invalidation. Should the 12-cent resistance reignite the selling power, the alt could see a sluggish phase within the pattern. However, the morning star candlesticks could help the bulls maintain their advantage. A close beyond the 12 cents level would open a doorway for testing the $0.135 level. However, a likely bearish revival at the 12 cents mark can delay near-term recovery prospects. Any close below the pattern could see a sluggish phase near the point of control. POC red rationale. The relative strength index took a bullish stance, especially after flipping the 57 mark to immediate support. A position above this level would reflect a conducive environment for continued growth. Furthermore, the OBV resonated with increasing buying pressure but could not replicate price actions at higher peaks over the last week. Thus, any reversals on the OBV could affirm a bearish divergence. The DMI lines projected a strong buying edge while the DI still looked south. Nonetheless, the ADX displayed a substantially weak directional trend for XLM. Conclusion. Considering the rising wedge structure approaching the $0.125 ceiling, the sellers would look to invoke their edge. A close above this resistance can encourage bearish invalidation. The targets would remain the same as discussed. Finally, traders should factor in broader market sentiment and on-chain developments to make a profitable move.